let's talk about housing, because there's a lot of talk about housing right now, whether we in fact are in a bubble. Obviously, housing prices have gone up a lot. Rent costs are really in record levels in various places. At the same time, the Fed's trying to come off of that sugar high.
Yeah, it's clearly a reset going on in the housing market. Those low interest rates clearly created a lot of demand, a lot of activity in the housing market. But people shouldn't forget that there's still an awful lot of younger folks out there who have delayed getting into their first homes. And that latent demand is still out there. And I think what we're seeing now is a reevaluation of how much house can I afford. And so we have seen people walk away from contracts. We've seen the builders slow down a little bit. But given how high mortgage rates are, the existing homeowners don't want to get out of their old cheap mortgages. So that's going to push demand to the new builds. So we're still pretty enthusiastic about some of the plays in the new, in new building for housing, like say a Lennar, for example, which tends to serve that lower end, the first home buyer or the one step up home buyer. So there are places to be in housing. You just have to be a little bit patient here as this reset plays through and folks renegotiate contracts and then find slightly cheaper houses to buy.
So, Kristina, you heard about Lennar there, maybe a lower end housing market. What are you seeing? There's a lot of volatility in the marketplace. Where does it create opportunities for investors at this point?
Well, it creates opportunities really at times when we see sell-offs. Of course, we haven't seen much of a sell-off in recent weeks, but when we do get those, that's an opportunity for investors to reshuffle portfolios, right? And sometimes it's about exchanging lower quality, less defensive for higher quality, more defensive, getting a little more yield in there. So I think areas that I would focus on right now are opportunities in healthcare like pharma, as well as technology, the secular growth plays there.
Joanne, one of the things obviously that's been driving the U.S. economy sometimes are consumers. Consumers had a pretty good time of it. They've had really good balance sheets. They've got a fair amount of income coming in. At the same time, there's more pressure there now. What does that say in terms of investing in stocks if, in fact, there's more pressure on the consumer?
Yeah, it's become a very challenging time to invest in the consumer space because what we have going on now is really a tale of two consumers. We have folks at the lower to middle end of the income distribution really being hurt by these high prices, this high inflation. For them, it's making their budgets a lot tighter. And so we're seeing that in the results of, say, a Walmart and a Target, where they're finding their shoppers aren't spending less, but they're switching away from discretionary products towards the necessities, which have lower margins. So it's hurting their profits. But then you look at the higher end of the income distribution, you see companies like Apple selling expensive iPhones. They're not seeing a drop in demand. Or say a Williams-Sonoma, right? They sell higher end, kitchen gear and furnishing type stuff, and they're not really seeing a drop. So it really depends what kind of a consumer products company you are and how much you can raise prices because you have a resilient supply of shoppers, or how much you're having to really trim them back to keep the shoppers walking in the door. And so it does make it a real selection question. And to Kristina's point, finding the higher quality companies that have the more resilient shoppers is really going to help your portfolio.
David, I would just argue that in this environment, having seen gas prices come down significantly, real incomes aren't as pressured now as they were just a little while ago. So I think that chasm between those two sets of consumers might not be as wide. There's a little alleviation of the pressure on lower and middle income American households right now, just because energy prices have come down. So it's certainly not a much better situation, but it is materially better, and we saw that borne out in the most recent consumer sentiment numbers.
Talk about earnings, if you would, Kristina, for a moment. We're just getting through the earnings season here. If we're seeing a tale of two consumers, as we just heard from Joanna, are we seeing a tale of two sets of companies as well, about high quality versus less high quality?
Well, certainly there are some companies that are far better able to pass on their costs than others. There are those that are really experiencing a reduction in traffic, for example, if we're looking at some of the retailers, and others that have held up fairly well. So I think, going forward, what we're going to have to make an assessment on is which are those higher quality companies that can defend their margins, that can pass on prices, that can weather this storm better. Because let's face it, it's going to be, there are going to be some significant headwinds in the next 2 quarters, I would argue.
Joanne, as a portfolio manager, how are you feeling about tech these days? I know tech covers an awful lot of sins. There are a lot of different things called tech. But how are you feeling? Are there opportunities right now in tech?
Oh, yeah, I think there definitely are. It could take some patience, really, for investors to reap the rewards of tech. But when we look at technology, what we look for are companies that are in the middle of a change in the way things are done, a demand coming from the market, whether it's demographics or taste. But the cloud area, companies shifting their activities away from internal servers, say, to the cloud. This is still happening. And more traffic on the internet is pushing data centers to have to expand and build in faster, wider pipes. So if you look for the companies that supply the parts to enable that, they're going to be able to sell well no matter what happens in terms of the cyclical side of the economy. And generally, if you pick and choose carefully, you can find ones that have deep moats around them, that don't have a lot of competition. You're not buying into companies that are selling commodities. So, whether it's a Broadcom or an Amazon, which really enables the cloud, or a Microsoft, which enables the software to make all this work, these are companies that are going to power through. They're going to be a little bit cyclical, but they're going to hold up better than others will.
Kristina, finally, let's go overseas if we could, because we've talked about the Fed. However fast they're going to tighten, they're tightening, no question about it. Europe looks like they're tightening. There are some places like Japan and China that may be going the other direction. Does that create an opportunity for investors?
I think so, David. It's not just a difference in terms of monetary policy. So we have China easing and we have Japan remaining very easy. But it's also fiscal stimulus. We're seeing fiscal stimulus in both those countries, whereas in the US and other Western developed countries, they're pulling back on stimulus. And so that sets up an environment in which there are built-in tailwinds that we're just not seeing here. I think there's potential there. Now, when we look specifically at China equities, there's a lot of pessimism right now around China, especially given headlines around the property sector. But if you ring-fence the property sector and look at the broader market, especially technology, there are a lot of opportunities in China equities, and I think there's the potential for positive surprise.
Joanne, what about China? And I'll push Kristina here a little bit. It's certainly the property sector, but there are also geopolitical risks. And we saw the delisting of a lot of the big Chinese publicly traded companies because of problems with the United States. There are a lot of frictions here. How do you feel about China? Are there investments that make sense there?
We do think there are some good opportunities in China and around China. Our international team, which manages a set of internationally oriented portfolios, they're in there, they're picking and choosing very carefully. You don't want to invest in a country as a whole. Like you said, the property issue in China is a serious one. But look at the cloud enabling companies in China. The political environment in China is still pro-growth, even if they're running into problems with COVID and politics, right? A company like Baidu, for example, or Alibaba, they're going to be able to be the engines of growth in China for many years to come, even with those regulatory questions. And if they get delisted here, right, they're going to be listed in probably Hong Kong. And so even if you're in an ETF, stocks in this country listed in New York, even if they switch over to Hong Kong, the investor is going to be fine with that. So it's not as risky from that regulatory perspective, I think, as a lot of people think. And even on the geopolitical side, you have to really understand what the Chinese leadership wants to accomplish. And one thing they want to accomplish is continued growth. So if you look for the companies that enable that, even if they're a little bit more volatile, those could be good places to be, particularly at the valuations at which we're seeing them now.
So briefly here at the end, Kristina, how do you factor in the geopolitics of it when you appraise possible investment?
It's very, very hard to. So I think the best course of action is to take a longer-term view and recognize that geopolitics can have an impact on the shorter term, rarely on the longer term, rarely on fundamentals, if at all. But use it opportunistically, because if geopolitics drives down stocks, that's an entry opportunity in my view, as opposed to anything that causes concern and a run for the exits.
Joanne, is that what you do in picking your stocks? Look for some low-hanging fruit, as it were?
Yeah, I like the way Kristina put that. You can't be a short-term investor in this kind of environment if you're going to go internationally, right? There are shocks that are going to happen. There's geopolitical risks. But longer term, right? Economies get through cycles. They get through these kinds of risks. And when you find those opportunities for good, solid companies that attract the valuations, you do have to act opportunistically.
Yep.